I'm Jasmine.
And I'm Matt.
And we're the Mortgage Millennials.
Let's dance. Trying to be still, keep my ADHD at a minimum.
All three of us have ADHD, so we're working to do our best.
We were setting this up like 5 minutes before you got here. This is all for you.
We have a very special guest, our first guest. You want to go ahead and introduce yourself?
I'd love to. My name is Dan Lyons. I'm an account executive with Nation's Direct Mortgage. It is great to be your first guest.
Inaugural guest.
Let's rock this bitch.
Nation's Direct is one of the wholesale lenders that we work with here at Eugene Mortgage Brokers.
Dan, how long have you been in the business? Where'd you start at? And how'd you end up where you're at today?
Good question. I've been doing this for 20 years, which I cannot believe. It's been 20 years. Prior to this job, I was a school teacher, all things, for 5 years. And then a college teammate, buddy of mine, got me in this business. And heck of a good ride. I'm very thankful. My job as an account executive is to basically build relationships. You guys, you are awesome human beings and friends, much as anything else. But my job is to go out there and build meaningful relationships, execute when given the opportunity. Fit my skill set very well. I don't know a lot of stuff. I'm not very smart. So
you're pretty smart.
So building relationships and being able to follow up to the small things well, has fit me very well professionally. I'm very thankful.
For people that don't know, do you want to talk a little bit about the difference between kind of the different options that borrowers have? There are the mortgage brokers, bankers, retail. Let's talk a little bit about that.
To me, it's maybe one of the most important questions to you mortgage and millennials out there. It's really important to understand. I'll put it in Dan terms, which is always the most basic way. In my brain, there are 3 ways to get a home loan today in America. They are big box bank, retail mortgage banking, and our channel, which is the wholesale mortgage broker channel. And the Dan version of each is big box bank is a Chase, Wells Fargo, and their bank. You can go there and they will say to you, here's my product, here's my rate, here are my fees. That's the end of the discussion. Those loan officers, in my opinion, quite frankly, are dependent on you walking into that bank and saying, I need a loan, please help. Because you're going to them, they're not on their toes, proactively finding a way to ensure they're bringing value to the consumer. And that's the big box bank. Also, from a pricing standpoint, just taking emotion out of it, data and math would tell us that if you find a home loan for less expensive opportunity away from option 1, the big box bank. Option 2 is a mortgage banker. This would be your Guild Mortgage, Mortgage Express, some of these outfits that are national that have branches. Retail mortgage bankers. Some of them are very good. They will close your loan. So the big box bank. You go to a retail mortgage banker, walk into a nice office, nice counter, and they will say, welcome. And then you'll go talk to a loan officer. The part you don't know is that they are selling their company's given products. In their products, they're setting margin in the transaction. So the corporate entity is getting paid on that loan. So is the regional people. So are the local people. And it's all getting filtered down to where you, mortgage millennial or consumer, are paying for all this extra margin for value that no one's bringing. Period.
For the people that are just getting started with this process, do you want to just talk a little bit about what exactly a margin is?
So the federal government has a baseline of how much money costs, and that gets all filtered up, if that makes sense. So by the time it gets to the consumer, a whole bunch of bills have to get paid, so on and so forth. Operations ran, people getting salaries, commissions. Who can originate a loan the least amount of cost? And this idea of margin is, let's just Dan math, say that, okay, everyone lending money today gets lended out at 5%. And my company might say, okay, we can run our business. We can lend out money and still make money. And we have profitable for-profit company. We lend it out to the Matt's customers and Jasmine's customers at 5.75. Other people and other entities, or using the other two examples we just talked about, they might not be able to make money at 5.75. They're offering a rate of 6.25. Again, these numbers do not equate to today's market, just an idea of margin discussion. In those other two channels, a lot more things have to happen for the enterprise to be successful, so the margin goes up. Our channel is stripped down enough to where we can offer it without having to pay 4 layers. For example, regional, local, middle management. We get overrides on your loan to pay them in their region, their national brand. The $1 you may value from your loan officer on up, they're making money on your loan. This is the idea of margin. And bottom line is, in our channel, 9.5 out of 10 times, there's less, we can do it faster, cheaper, better to the consumer. There's less cost associated with how we reach. The mortgage banking model right now, as we speak today, March 6th, is going through a sweeping change. Massive migration to our channel, massive migration from retail lender A to retail lender B. Gil just bought Academy, 2 big nationals buying each other. In my opinion, retail mortgage banking platform is going under some scrupulous changes based on too many hands in the pot per transaction are trying to get paid. Therefore, they cannot offer as competitive a price to you, consumer, that another channel might offer. Third channel,
The best channel.
best channel, in my opinion, the wholesale mortgage channel is, on average, to save the homeowner $3,600, around $30,000. Life of is a big deal. Why is it less expensive in the wholesale channel than it is in the retail channel or the big box channel? Great question. Thanks for asking. The reason that it's cheaper is because it is stripped down. There are not 3 layers of management overseeing this entity. The small business owner, locally owned and operated, who has options to, not just their product. So when you go to this channel, you get a home loan. Person you're talking to, loan officer, broker owner, is absolutely having options to less than 5, up to 10 or more. Legitimate lenders like myself will do the exact same thing that the big box banks do and the retail bankers do. We sell our loans direct to agency, meaning Fannie Mae, Freddie Mac, Ginnie Mae. They buy, insure, purchase all of our loans. We can just do it, a lot less layers of cost. And I would argue as quickly, as efficiently as any other channel. So it's a long-winded answer, Jasmine. I'm sorry. That's the answer according to Dan. There's 3 different channels in large part to get a home loan.
Well, I think it was a really helpful explanation for sure.
Thank you.
It'll help people understand a little bit more about what goes into the process.
Yeah, and I'm going to add to that. So I did a presentation in Eugene 10 years ago, and it was for about 30 real estate agents. This was our topic. What is wholesale lending? What is the economy? What is it that brokers do that bankers and retailers don't? And I was sad in that meeting. We ended up having open dialogue with the agents. Again, I'm not an agent-facing business person, officers and brokers, but I was really sad to learn they didn't know either.
Mm-hmm.
I think it's incumbent upon the agents and anybody who has an understanding of what's going on to really consider a mortgage broker for their loan. To save your borrower some money.
Mm-hmm.
The agent's sign is in the yard, so the homeowner's brain says, oh, that person's going to give me that house. And they will be a huge, huge pivotal role in getting that home. That comes to us. We're getting in that home.
Mm-hmm.
We can do it as fast and for sure cheaper as somewhere else in large part. So I was interested to learn that even professionals in our business don't understand the stark difference and contrast that exists between avenues.
And the big takeaway is just get a loan estimate, shop it out with us if you want. It's numbers are numbers. Take the emotion out of it. You can see what's better price for you and what makes the most sense.
Yeah, the math don't lie. I always recommend, I think agents, maybe by rule or as good practice, are supposed to hand out 2 or 3 business cards to the consumer when they're asking about who to go get a home loan with. I hope that one of those cards the agents are handing out are to a local mortgage broker.
Mm-hmm.
Because I think if you put, 3 loan estimates side by side, 9.5 out of 10, the mortgage broker's fee sheet will be better than the other ones presented. Bankers and big box banks, they want the 800 FICO and the 80 loan value, the slam dunk easy loan, because they know they can do that loan efficiently. In those channels, sometimes they'll say, well, if it's a government loan, low score government loan, you can broker that. But to them, they only broker once in a while, so it's a little bit painful. We do it all day, every day, and have these incredible synergies between my company and my partners, you guys, where you have direct access to underwriting, doctors, funding, setup. It's absolutely exciting to me that my team has to perform at a very high level every single time. It's not open for debate. We're always accountable on every transaction. It's lost in this business. Well, pricing's good. Who cares? Can you close it? Can you close it well? Can you communicate efficient and effective? My team's held highly accountable to that every single time. If we don't, we go somewhere else. So that part of our business also is a huge component of that. There's a handful of people involved in every transaction, and we're all fighting like heck to make sure that the experience the consumer gets is a great one, so we can get more opportunity and really grow business versus just doing loans.
Basically, what we want everyone to know is that it's always good to talk to a few different people, especially if it's a few of the different options that Dan discussed. You never know, based on your situation, one might be a better option for you versus your friends who are looking at the same time, that it may be better to go with another option. And so if you can try the different options, then you're able to see what's going to work best for you, which is what we care about the most. Even if we can't help you, we still want you to get the best deal.
Again, something like 55% of people didn't shop on their mortgage for their purchase. And that's crazy. We're seeing almost double the average number that you gave out earlier, I'd say, on most of the savings around here. So it takes 5 or 10 minutes of your time. Why not do it?
Yeah, I'll say it was 6,500.
I was going to say it could save you thousands of dollars. Why not talk to one more person?
Yeah, it's interesting, actually, and this is probably going to require some psychology expert, but when you are a human being, you want water and shelter. As opposed to me giving the hard-earned money to someone as a landlord on their own home. And so when you start realizing, oh my gosh, this is an option for me, it becomes all surreal. Oh my gosh, I'm going to have a backyard. I'm going to have a kitchen. I'm going to have my own home. This is very exciting, even intoxicating. First person you meet gives you numbers, and you're like, I can afford that. My salary and my hourly wage, this person, he or she is telling me I can afford this home, and your brain turns off. My request to especially workers in Millennial, but to anybody, is to go for your brain off. Get that data, get that information, and be confident in saying, I want to understand all my options. Make sure one of those options you consider is a mortgage broker. And as we've already discussed, there's got math and there's emotion in there as well.
And that is a very real thing. Humans make the emotional choice first, and then they use facts to try and back up whatever decision they've already made. And so it's against your instinct, but just shop. It's not too late. We deal with this all the time.
We're used to it.
I can speak to these two people on our podcast here today. Both of these professionals, if for whatever reason, first option you went to is better than what they can offer you, look you in the eye and say, hey, that's a great option. That's what a good loan officer would do, is really be focused on what best serves you. Always comes back around. You do it serve at heart. So yeah, this is an important piece. A very important piece that I wish everyone in our business understood.
And another thing to keep in mind too is that even if they talk to a few of these different options and find out, oh, someone else might offer them a better deal, you can still come back to us and let us know what they're offering you. And even though you may think they may be able to offer something better, we might be able to beat it.
It's confusing. There's fees, plus there's rates. There's a combination of the two, and apples to apples is tough sometimes, if not impossible, especially if you're trying to do it yourself. And there's a lot of companies out there that kind of prey on people. I mean, their whole business model is that they make so much on the 1 out of 3 they do get because of their margin. They don't care if they're priced out, So really shop those. There's a couple big ones out there with these cool names, but they're not actually, they're not affiliated with the military. Like Veterans United is going to make you think that you're getting the best deal in the world, and there's no connection there. It's definitely worth shopping that out as well.
And especially for the first-time home buyers too. Just buying a house in general is an overwhelming process. So if it feels overwhelming and you have questions, you should never feel like it's a stupid question. There's no such thing in this process. We're happy to help. with whatever questions you have.
Well, your point is I want to add that the cost of your loan and the rate you get are important variables. Do you trust who you're working with? Do you trust that they have your best interest at heart? And if you do, and it feels good in your heart and you assist you, you should proceed. To Matt's point, there's all kinds of companies that are in small cubes in the middle of America just calling their faces off, trying to talk you into doing a VA refinance or an FHA streamline. They're calling 500 people a day. Maybe that makes sense for you. I do believe in this huge decision you're making financially that you should ultimately choose someone that I can trust.
The banks having clientele walk through, that's the opposite of what we have. The majority of our businesses, repeat customers, referrals, word of mouth. That doesn't happen if we're not doing right by the client. So we're in this unique industry, as Dan was explaining earlier, where we really can have good, fast, cheap, right? Like that's the only industry. Normally they say pick 2 out of 3, but we can offer this hand-holding boutique experience all the way through. We can educate you. We can get you the best rates, and we can close on time just fast as a direct lender. So it's really worth chatting with us to see if there's something we can help you out with.
20 years doing this, I don't want to do it anywhere else or any other channel. It does feel good, I think, for all of us to say, it feels good in our hearts to be able to know that we're in the channel that best serves the consumer. That's important to me. I know it is to you guys.
And there's a lot of, like I was saying earlier, a lot of loan officers that don't understand technically really where they're working or the margin or the secondary market as well as we do. But that's why I'm here. What am I going to do for my family? Can I offer them a mortgage that I feel comfortable is the best price and the best option for them? And I can, and that's why I'm here. Otherwise I'd be referring them out left and right. I wouldn't be able to work somewhere like that.
It's ultimately a blessing to be in a spot where you're confident about the foundation, which is standing to look people in the eye and say, I think best served.
It's not just all about who's going to give you the best price. That is important, of course, but it's also about who can you trust for the process. It can be a very intense, stressful process, especially if it's your first time. It can feel overwhelming. And so you just want to have someone that you know that you're going to be able to work with, that's going to be able to answer all your questions and just help you throughout the process until you get your keys.
Don't take your first or second even no as a final no. If you haven't talked with a broker yet, or especially a broker that knows what they're doing with those guidelines, because there's a lot of flexibility in there.
Mm-hmm.
Matt brings up another good point as far as why it's important to do the research and talk to multiple people. Because I remember back when I was a real estate agent, I would hear a lot about people, they went and spoke to one person and they got turned down. And then they just thought they couldn't purchase a house. And then someone ended up referring them to Eugene mortgage brokers. And all of a sudden they got approved right away and they were able to get into their first house. Make sure that you're getting all of the information that's going to benefit you.
Which includes making sure one person at least that you're talking to is a mortgage broker.
Yes.
Same thing with the idea of you guys all shopping for our business. Price-wise, that you guys are also shopping us product-wise. So for the borrowers that don't fit in the normal conventional scope, is there other products you guys offer? Bank statements, stuff like that, investment products, like what do those look like?
Yeah, so a loan officer's access to products is a huge variable to the consumer's success. 1,000% of consumers that want to buy a home have a little bit different circumstance. Some have commission, some have bonus, some are hourly, some are part-time, some are seasonal. People want it on and on. So,
Or self-employed.
thank you. So having a loan officer that understands the guidelines associated with all those different dynamics is really, really important. An experienced loan officer, loan acumen is a huge piece of the puzzle here. Because most lenders, most offer conforming loan, conventional loan, which is Fannie or Freddie loan. Those are, as you guys know, government entities now, and governed by the government. And that's what, I don't know, 90% of all loans in America are sold and held with Fannie and Freddie. Ginnie Mae is the other insurer of governing loans for FHA and VA. So I do 100 loans that issues direct, 85, 90 are either a conventional loan or a VA or FHA. But to Matt's point, the last 2 years, because it got difficult, it's gotten tough, and borrowers need more options. The millennials would not know this, but there used to be this thing called subprime lending. That's where the borrowers had bruised credits, not the right employment depth or credit depth. There was really good solutions for them to buy homes. The government, Wall Street, lenders like nations direct lenders, wholesale lenders like my old companies, lending on everything. And it got out of hand, and then we had the bust in 2008. A lot of fingers to point there. Since then, it's gotten a lot more restrictive, but still incredible amount of options exist today. So besides your conventional, your VA, your FHA, new things called non-QM, Alt-A, alternative lending. And there's some really cool products out there that I can speak to. We offer for self-employed borrowers, as Jasmine noted, we can use 12 months of business bank statements to qualify for income. I do a bunch of those loans every month. Really good loans. They're not priced like a Fannie or Freddie loan. But you can go up to 90% loan to value on those loans. You can still be in the high sevens or low eights. Interest rate guesstimation. It's just a nice, flexible way to serve the self-employed consumers because, I'll just say it, many self-employed consumers are self-employed. It's awesome. They have a lot of write-offs on their taxes. So although there's plenty of money coming through, they want to reduce the income to reduce their tax burden. It makes total sense. I would do the same thing. You need your taxes to qualify for your loan. Not enough income there to qualify. This is something that's been brought to light in the last 24 months or so. Bank statements is a great solution for borrowers. And then another one that was pretty popular when pricing was a little better was this idea of a DSCR, debt service coverage ratio alone, for non-owner occupied properties only. Those loans are pretty unique. They don't care about your employment, your income. They care, does this non-owner property cash flow? Rent positive. If it is and your credit's good, you can get a loan. Also, a 1099 loan we offer, non-QM space to borrowers who use real estate agents. Last year's 1099 reduced 25% of the total, but the rest by 12 months per monthly income figure. We do a handful of those per month. Next solution also in the bank statements. The new one they're offering is a profit and loss loan. We look at the company's P&L. Has to be audited by a third-party CPA. The P&L is positive enough. You can have a loan to a restricted LTV, have a loan. So I would say no matter what situation you're in, as a professional, even if you're in between jobs, still come have the conversation. Here's where I'm at. Here's where I'm going. Here's where I've been. What are my options? I think in large part, you'd be surprised. Thought you had no options. Probably have a couple options. Not right now. I'll give you a great roadmap of how to get yourself ready to buy in 6 months or a year. That to me is what a good loan officer does, is guide and counsel, love, and say, I want to help you. I want to help you find a home. Here's the roadmap to get there. So there's programs out there well beyond just the vanillas. There's loans out there for people with challenged credit, 580 credit score. The 550 credit score with my company and get 96.5% financing on FHA. So there's some options out there.
I think we closed a 540 score or something, 10% down with you. She didn't have terrible credit per se. It's that she had one open trade line that had went late. That was it. And she had no debt. Everything else was paid off. And so she had like one of those fake 540 scores and she got a house at a smoking rate now.
Amazing. Don't say no. Never is no. It's maybe it's not right now. Never is. There are options that exist. Good officers know that happen in your life professionally to get you on that roadmap for success. Listen, if you can get yourself into a home, you should do it. So many reasons. Most of them, most important things were it's your home, it's your family, it's yours. Equity gain. Live in an amazing place. People want to live in Oregon. They live in Valley. If you're out there listening to this, if you are, I'm telling you, get still focused on getting yourself a home. Best thing you ever.
Going back a little bit to the bank statement loans, you had mentioned sometimes for self-employed people, they end up doing the tax write-offs and everything to make it all work out with their business. Would you say that for someone that was self-employed, like a tattoo artist, for example, would you just suggest that they would go in and talk to someone a lot sooner in the process just so they can maybe plan it out a little bit more about adjustments they needed to make with their taxes and stuff in the future to be able to
Mhm.
have a good setup for like the bank statement loan or one of those other options?
Yeah. So someone who's self-employed, using a tattoo artist as our example, I am not a tax person about taxes if I don't like them. That person would be well served to go sit down with a professional tax person and say, hey, I'm self-employed. I don't want to pay a million, gazillion in taxes. I do want to have a car someday. I want to buy a car. I want to buy a home. How can I most productively run my business for a profit, protect myself from the tax exposure, and also show enough income in my taxes to be able to qualify for a loan? That's probably a really good point you're making. And someone smarter than me should sit down and help them understand that. Like bank statement loans from the person who's past that. I want to buy a house. My partner does. My taxes don't show that I make any money, so we got to look at a plan B. In which case, how we do it, we take the tattoo artist's last 12 months of business bank statements, we add up all the deposits, and we take it in half. We figure at least half these deposits are going to be cost to live in your business. These insurance, I don't know, right?
Supplies.
Supplies. Then maybe we take the 15% remaining and divide that number by 12. That's your monthly income figure. Qualify with that income figure, it's an opportunity to buy a home.
I think it's really important for people to realize that, like you were saying, the government sponsored entities at the back end of all this are making the rules. You're going to have to pay it one way or the other. There's only one way to file your taxes, and that's the right way. So, do it that way you will. But I think I've served a couple of clients where they bought 3 houses with bank statement loans in a couple of years, and they've spent, tens of thousands probably on unnecessary fees because they wanted to write off more than I think they should have. I don't know. I'm not a CPA, but it's just kind of funny that people don't ever put that together. You can't. It's all ran by the government, and
You're right. It all washes out in the wash because, yes, you got the equity gain. Yes, you got a mortgage, but you paid 8.5 for 3 years on that mortgage in interest.
Mm-hmm.
It's going to the government. So you're right. It all comes full circle. I come from the school of thought of be transparent, be honest, do your taxes.
Yeah.
For example, I had a loan today. I was driving down here for this awesome podcast opportunity. It's just 2 people, and the borrower had $275,000 taxes owed to the IRS from this year's filing.
Oops.
And so they don't get to have a house until they pay that off or until they enter into an installment agreement and make a payment. So the tax thing is dangerous as it relates to mortgage lending, for sure. I'd be mindful. I would start with a loan officer with that. Refer you to an accountant, someone they know in their circle of trust, and we get a game plan together. It might take a year, maybe take 6 months, but if you want a home, your income needs to be roughly X for your taxes, or we're finding alternative solutions. Should be.
That's a big part of being able to find a trusted mortgage professional. Once you have developed that relationship, we're able to refer you to other trusted professionals related to our industry, whether that's an insurance agent, a CPA, financial planner, anything really.
Big time.
And that way, it's someone we've worked with. It's just more of a trusted situation that you can know it's someone that we've vetted already for you.
Agreed. So there's some common tones to all these points we're making. And to me, they all lead back to just having relationships and trust, right?
Yeah.
Mm-hmm.
It's all life is, but certainly our business is very much centered around who you connect with, who you trust, who's in your sphere of influence. Team of people working together to best serve the consumer. That's what you want.
Purchasing a house or purchasing multiple houses are going to be the biggest purchases you ever make. So you want to know that you have a trusted team that you can rely on.
Couldn't agree more.
You guys offer some down payment assistance programs, is that right?
Yeah, Nations Direct offers one specific DPA, down payment assistance program, is through FHA, called the Access Program. It's a 3.5% second mortgage behind our first mortgage of 96.5. Borrower is getting 100% financing. We are getting an FHA loan on the first mortgage. That mortgage insurance premium reconciled within the payment. Second mortgage is a 10-year fixed, on and on 3.5%. You're getting in with the 100% finance. Those were priced for a long time where you couldn't get limited credit to offset closing cost prepaids. Now you can.
So yeah.
You're going to play a little higher than normal FHA mortgage. You also have no money down.
Mm-hmm.
And you close that loan without any assets. So in fact, I offer 100% financing.
For Dev Northwest, the one here in town, they have an IDA and it's a 5-to-1 match, which is pretty cool.
Like that's insane.
Wow.
Yeah.
So the big thing with that is there's income limits. And I've told people out of college that never listen to me, like, why are you like before you're in the workforce, apply for the IDA, whatever county you're in, get it together, get the counseling done, start the savings account, because then you are eligible and you can buy in a couple of years. The income's pretty low, the cutoff limit. So to afford a house and afford the program's a really tough stretch. But if you do it right out of school or out of high school, get that IDA together.
Good idea, Matt, because you're right. A lot of programs have income limits.
Mm-hmm.
Well, I'm at the income limit, but my price point for the house,
right,
the two don't coincide. So that sounds interesting. But DPA is out there. I think customers should be asking the loan officers about it. Brokers would have way more access to DPA than retail big box banks would. So yeah, what a great question that is. Ask the questions. Don't sit back and pay a bunch of rent for 5 years, understanding truly what your options are. There's someone out there right now who thinks home buying is not possible, when in fact it is. So I'm encouraging anybody who listen to me. Ask the questions, dive in, listen, seek to understand the options might be. And again, if not now, there's a roadmap to get that done.
It's possible for everyone to be able to buy a house. Sometimes it is a faster process and sometimes it just takes a little bit more time, or it's just more of like a puzzle. We have the puzzle pieces and we just have to do a little more work to make all the pieces fit to get you to that end goal. But even if you think you can't, most likely we can figure out a way.
Yeah, it could be like a little kid's puzzle, 9 pieces. It could be one of those you do like during COVID, it's 1,000 pieces, but you can get it done.
Mm-hmm. Set yourself up for success and getting a plan and realizing that $1,000 car payment is $250,000 of house price, and looking at it through the big picture. And you know, like that's why sitting down with us ahead of time, I think is such a big deal. Is like, let's help you figure out those puzzle pieces so you can start putting it together yourself.
Mm-hmm.
And I'm curious with the way that pricing kind of is now and cost of living not always matching up with people's income. I think it's becoming a lot more common for maybe some friends or family members, but most likely, I guess for this example, it would be like friends coming together to go in and on a property together.
Mm-hmm.
Have you dealt much with that? And is there a limit, for example, for like how many friends could be on the one loan to go in and on that together?
Good question, Jeff. I've seen mostly where it's like a family deal.
Mm-hmm.
You know, mom and dad or mom helping a son or daughter.
Mm-hmm.
There's a lot of ways to do that. I have seen a few friends coming in together and try to buy a home and get it together. I think oftentimes that's a good solution and it works. 4 is the max.
Okay.
Yeah. I've never seen 4 friends. Well, that'd be awesome.
I think it'd be pretty cool. I've seen a couple articles lately on like either friends starting out together or towards the end as they're getting older, they just almost like a compound that they get together and then they just live out there.
That might be the millennial thing, right?
I wouldn't do it. I don't think.
That's what I'm saying.
Like, if I was going to look at that, I would be looking at doing a 2, 3, 4 unit, renting the other sides out, having sole ownership, just because there's too many risks for me, I feel like, to be in a co-op type situation.
I think it could work if it was done the right way, though, especially with, I know some people right away or at those entry level positions, they may not be able to qualify by themselves. So being able to come together with friends and qualify together gives them that option. And then they could always, I would probably recommend using a trusted attorney as well to come up with some kind of paperwork so that then when they're ready to sell or go their separate ways, they have a setup where they're either going to rent it out together and they all split that income, or they just sell it together and split it that way. I think it's doable.
Yes, it's not doable. I think in that situation, the thing to think about is in 3 years, 5 years down the line, what's that look like from a taxation standpoint? Also, me and my 2 best friends buy a house. We live there. We're young, we're having fun. This one gets married. This one gets a job in Florida. I'm stuck with the house. There's all kinds of questions. They should be good. But yeah, 3 friends could go buy a house. I would do. Yeah, again. Take those same friends and buy a investment property. I see it all the time where a couple would buy a house together. Free, committed relationship. We're in love and it's going to be awesome. Buy this house and then it didn't work out. And then partner A wants the equity. Partner B doesn't want to give the equity. I want to stay here. They can't agree on the equity, and it can get divisive.
Working on one right now that if one payment's missed, his DTI goes from 50 to 150 because everyone's paying for it now and they co-sign together, and like that's just
it can get ugly. There's a lot of variables.
Yes, of course. And I think in the examples that I'm giving, I am also saying that it's very important to have a lawyer and contracts involved. So all of that is arranged up front so that if something does come up, there's not going to be any kind of arguing because it's the contract.
Legally accountable, right?
Yes,
No, that makes sense. Sure. I know that a lot of people ask me all the time, Dan, can you close on the name of an LLC trust? It's no. Let's close it in the name of the individual. After that loan closes. Take the vesting from Desmond and Dan, put it into an LLC this year together, which is the bylaws of that company. To your point, the LLC is a great solution.
And so in that case, then would they just be going to like an escrow office to get help with that?
Servicer can do it. So you need to check who purchased your loan, if it's Fannie or Freddie, because they have different rules, because of course they do, right? But they say basically the same owners can start an LLC together and deed it over. I think they could even put the bill into the LLC's name.
Yeah, and the lawyer makes the LLC. Agreed.
Cool. But the state of Oregon is a non-recourse state, so they can't sue you for your foreclosure for the damages. And that's why they always make you do a personal guarantee. Mortgage is personally guaranteed still, so you can't get around that. I think people's intention is not to actually lower their liability from an injured tenant or something. It's always like, this will get it off my credit report if I have to foreclose. And it's not how.
Right. Dan Lyons is signing on that.
Yeah, you're still personal. Yeah.
Definitely agree.
One of the other things we were wanting to talk to you about was just because you have been in the industry for so long, we know that you have lots of unique stories and situations.
I have a lot of those stories.
We figured.
A lot of different ways in which to solve these things. And if the consumer went to a loan officer who didn't have enough acumen or experience or understanding or access to information, you might not know that there's some solutions out there. Sometimes it's just simple as that. The officer they're working with didn't know. Sometimes even more in depth than that. It's an analysis of income. An officer who's been in my life for a few years, a good friend, they learned for the first time that I don't have to have 2 years of commission earnings to use commission. I have to have more than 12 months. And his deal went from, I'm calling on this, so I think I'm dead. I said, "You're lying. That's a phone. We can help." I do like it a heck of a lot when my broker, my loan officer friends call me and say, "Dan, I went to the other lender, not you, because their prices look better that day, but they can't get it done." Listen really closely to what the issue is. And I have direct access to my underwriting team and say, "Hey, my friend Matt called me, use lender B. They can't do this for this reason, but I think this, and here's why." Have a quick open dialogue, look at the guidelines, cross reference guidelines against the transaction. Oftentimes, 7 out of 10 times. You can do that. Here's how you justify it for the guidelines. Here's how that makes sense. That happens all the time.
I think that's a big thing too. Good loan officers make their case out of the guidelines. There is some interpretation to it, but if you can show the guidelines and make a good case, it's going to go through. And I think that's lost at a lot of this direct lenders where you have one underwriter down the hall. You don't get to ask multiple different points of view on it or who thinks what, or get a true specialist for that loan type.
Yeah.
And I think that's a big part, going back to what we were talking about earlier with just the different types of loan professionals or mortgage professionals that you can speak with. Because if you initially speak to a bank, for example, they have very strict rules and guidelines, versus if you were to talk to a mortgage broker, then we have more options. And so because we're able to look at almost a never ending supply of wholesale lenders, we can figure out who may be able to work best based on your specific situation. And especially when we have these relationships that we've developed over the years, like with Dan, someone that's been doing it for such a long time, he's heard of all kinds of situations that's just one more resource that we have to make sure we're trying everything we possibly can to make sure we're figuring out the best option for you and how to make it work.
One of our coworkers had a VA question on Friday, and it was a hard no everywhere he was checking. And unbeknownst to you, I emailed Jane, and she's already like, "Yeah, that rule is stupid. I won't do this scenario yet, but you get it a little closer, I'll make that scenario happen because the guideline's vague. I see what their intent is, but it's not helping our veteran borrower right now. And I'm comfortable with interpreting that as them wanting to. And I'll call the VA and talk with them if I need to too, and that
VA is one.
They'll even let the house appraise short. If you're like, "Hey, I really like the house," and write a letter to the regional center can say, "Okay, I guess you can get it." It's like a kid on the day before Christmas. Like, they'll make it happen because they truly want to work for you.
I love it. I love it because you have some bending and bendability, if you will, focused entirely on this. Let's serve the veteran in the home loan and save them some money in a refinance. It feels really good to me to be able to just be calm and listen and seek to understand and make all my notes and then have a dialogue with the underwriter about solutions. And love that. From a competitive standpoint against other vendors, but also most importantly, this is an emotional experience. Having a home is a very big deal. Mm-hmm. So for, two young folks to be so close to their first home and then have a fallout, they really fascinating thing emotionally. Mm-hmm. We take it all real serious. YouTube as well.
We had one where we were seeing differently, and I was like, I think this is within the realm of the guidelines, and the borrower made some poor decisions, but like, I'm here to serve the client, get them what they want, what they qualify for based on the written guidelines, and we ended up getting that one through.
Mortgage loan officer acumen and experience matters. Your loan matters. Could save a borrower thousands by just having a loan officer who knows.
It's a lot more of a different environment than a normal mortgage office. We're all very collaborative at our office. Within the office, we added it up, and there's over a century worth of experience in our office. So if one of us doesn't know something off the top of our heads, we're able to just I can go to Matt's office, brainstorm, and figure it out together as a team, which is really nice. And you find that just like other industries, it can be very cutthroat. But it really makes a difference when you can have an environment like this where you're able to just work together and just figure it out as a team.
Sometimes the big problems have the simplest answers. It's easy to get overworking it, trying to figure it out. And we have someone that's go, hey, did you think of this? Oh,
Mhm.
So true.
good.
Let's take a collaboration.
Yeah.
Mhm.
Your eyes to the transaction. This is serious business help. Who wants to do it right?
And that's why it's so crucial to find like a really
Yeah.
trusted, experienced professional, because that amount of time where your loan officer submitted the file and then it gets returned, you have a short deadline to get the deal
Yeah.
finished.
Your pre-approved
So
doesn't
this
look
could-
as good as they
This could hurt you and the deal being able to get it finished. And it could just make the seller upset. And if anything else comes up with repairs, for example, that you may find are needed during the inspection, they're going to be less likely to want to assist you with those if it's already been a difficult transaction.
With someone who's willing to ask questions and be humble and say, I'll make some do it to us. Research. Someone told me that today actually there's a 40% reduction in license renewal in Oregon.
Oh, wow.
So there's less loan officers. And if you're not
which is good.
you're not a good loan officer that's serving people and getting opportunity, you can't last long in our business. No one can know everything. There's a lot of moving parts. Having access to information and option, we do not challenge. Wow. You know, those just say that. Actually, I have no idea.
Yeah.
Find out for you.
The mortgage industry, it can be very similar to the real estate industry, that there's always a very high percentage that don't make it past the first year. And they just think it's going to be the quick fix that's going to earn them the big bucks. And then they realize how much work it is. So you really want to have the people that are willing to do the work and willing to do the research.
I got a client referred to me for a reverse mortgage. Ended up doing it all. And he was kind of quiet about what happened at first and why he didn't just do a reverse purchase right away. Well, his nephew got his MLO license and told him VA loan was all gravy. And they went to do it all and realized that they weren't actually married, the borrower and his partner. And then they didn't have the money from their sale. So he had to do finance it twice.
Right.
People think FHA, bad credit score, less worthy. You deserve a higher rate, right? Wholesale side, what are we, 0.75% lower always on FHA stuff? Like routinely, we are 0.5% to 1% even sometimes cheaper for an FHA rate versus the average conventional rate. The direct side, they double their margin on it. They bring the FHA rate up to just a par, just above conventional, because you think you deserve that as a 640 borrower. You don't realize that the market says otherwise, and they make twice as much money on you.
It's justification. It's going to take more work and more time.
Yeah.
It's going to get more margin. So a veteran.
They just screw the veteran instead.
Right. A veteran who went to that retailer, they orders on, literally paid who knows how much to warrant fees, but 1 full percentage point rate higher.
Yeah.
Because they didn't ask enough questions to go to check with the mortgage group. Mutual mortgage, they're justifying that mortgage become out the time.
Yeah.
It's a dangerous,
Let's
weird game group we live in. Courtesy, honesty, and serving each other is what it's all about.
That's why the Veterans United one just ticks me off. You know, I go through MMI and I'm looking at who closed what, and I'm like, who is Mortgage Research LLC and why are they closing all these in town? Oh, that's just Veterans United's real name, you know? And I'm like, really? Like you just you throw a cool logo up and the name Veteran in it, and people just flock to you thinking that you're affiliated and helping the borrower, but instead you're just churning dollar bills out.
Well, and they just have no one to tell them otherwise. They're going online and
it works.
It looks legit. So
The few companies in America today have a different philosophy for mortgage origination, and they're big time companies. Have sports arenas named after them. Quicken Home Loans was forever huge mortgage origination. They still are. Changed the name to Rocket. And I was watching the Super Bowl 2 or 3 years ago, and all of them geared toward notes.
Mhm.
All you gotta do is you gotta go on this app and you click a few buttons, put some information in there, and you get a Rocket mortgage, you get a loan. And I'm like, yeah, that looks pretty sweet. But in our experience, all those loans come to us because
They're not.
messed it up. In our experience, the person on the other end of the Rocket mortgage wasn't allowed to have the acumen or
Right.
experience or understanding your debts. So that process was lacking communication or efficiency. And those, if that Rocket mortgage thing really works, we got a business. I'm just telling you, it doesn't work at the same level. I mean,
It works for their it works for their pre-approval letters. We get phone calls now. I don't think I used to 3 or 4 years ago. It seems like now they call like, hey, this person's good, right? I'm like, yeah, I wouldn't have put their name and address and everything down there if they weren't. Like, just making sure, because Rocket, if you just state your income, they'll write you the letter. They don't actually ask for your pay stub and all that fun stuff up front. So it's just assuming that what you told them is the truth and assuming that you as a consumer know how to even calculate your income the same way that we have to. It's been a good turn, I think, back to local lending in that regard. And since they're saving money by coming local anyways, I think that's good. If Rocket was the lowest price, that'd be one thing, but they're definitely not. So I think it's a win-win.
When I think that these companies are really, really, really good marketers, have a budget for marketing, and they're able to, raise some tides relative to opportunity. That's great.
I mean, we have Rocket signed up as one of our lenders, so we can see the pricing, and it is much cheaper on our side. So I don't know. That's a lot of margin there for advertisements and who knows what. I think you're in a kind of unique position because you guys hold a lot of loans that you service, right? Mm-hmm. Can you tell us a little bit about assumable loans?
Assumable loans?
Yeah.
Yeah, and also just about how when we're working with the wholesale lender, how some of them actually service their own loans and some do not.
Do you not want to talk about assumable loans?
If you don't care if I'm honest about it, else I'll do it.
You can be honest.
That's what we want. Honesty. For anyone that doesn't know, what Matt's referring to is the assumable rates. Sometimes when you see maybe a posting for an open house or a flyer for a new listing, it may mention it's a VA loan with an assumable rate that someone can take over. And so that is what Dan is going to talk a little bit about now.
Yeah. So on paper, is it allowed, using that VA example, Jasmine, I want to assume this person's loan. Is it allowed? Yes, it is. My company, Nations Direct Mortgage, in large part, we fund the loans and it's hard to explain, but we sell the loan to the agencies and we keep the loan for servicing. Now, so you would say, Dan, this borrower wants to assume this loan. Is it possible? It is. Just pack a lunch and wear a hard hat, because it is very much a challenge to get any servicer, any company to dive into all that is required to assume a loan. It is the same process of getting a fresh brand new loan times about 4. There's a lot of reasons for that.
You got to kind of layer in there too, that because it's the servicer who's processing the assumption, right? I mean, that's kind of like your nurse performing your surgery kind of deal.
Someone who's good at servicing loans now having to originate, review your income and your assets. They are not making a normal commission on it. Don't have the acumen or understanding of how to structure and do a loan. So, in my terms, I prepare for 3,277 emails, 5 million voicemails back and forth. Is it possible? Yes. I'm not discouraging anybody listening to not try it. I'm telling you the truth. I know enough to know that assuming a loan is a process, and never have heard someone saying, "Oh, that was a great experience." "Oh, that was fun." Maybe worth it. And I'm not discouraging, but that is a process from all that I've heard, all that I've read. It's painful.
And would you say the majority of the time then that it ends up being worth it, or not really?
It's an interesting question. I don't know how to answer that, because if you are able to assume a VA loan at 3.375%, and you're able to assume it in a timely enough way to keep the seller and the seller's agent happy in the timeline you need to assume that loan, you have that much time, which even today in this market still, houses are still selling. If it all worked out, is it worth it? Yes, it is. If they get 3.375, which is what's on market today for $0.06. So is it worth it? Potentially. But it's hard to get a seller and the seller's agent to sit back on their heels and wait for Dan to go assume this guy's loan. And that'd be damn good paperwork and follow up and follow through, and have a lot of time on his hands. He has to assume any kind of efficiency, seller's loan paid off, sellers moved out of their home, moved on in their life. Most people don't have the patience for that. If it's possible, yes. Is it worth it? If it comes to be, it can be. Also, I would say, you want the home and you can afford 6.25, close that son of a gun. Get yourself into that home. Obviously, in the VA loan, at any point in time, if we move down 50 basis points in rate, we do an Earl, it's new appraisal, it's cost loan, it's options lawyer. So I'm no expert on assumable loan, other than I know enough to be dangerous and that they're very different.
And on the other side of that too, if you're the seller and you're thinking about offering an assumable loan, or your realtor is, you should be talking to your loan officer too, or a couple of them, to get a straight answer. There's some really unique spots that you don't want to get caught in. You can lose your VA eligibility if the seller or if the buyer doesn't have it. I noticed the guideline today too about FHA in there. If they assume your loan, they don't pay the last 12 months, you have to get hit with the debt still. Even with the assumption done, it says that they have to be making the payments on time, or it's hitting you because it's still on your credit report there. There's a lot of weird little caveats that haven't been ironed out because we've never been in such a rate increasing market. And this is what, the first time in your career probably this has happened. I heard happened like 20 something years ago. There was a similar dip. Or
Whenever this was even a thing.
Yeah.
Until the last 12 months. And I've seen advertising saying, assume this loan. Great. It's hard as hell. And it's a lot of work, and it requires some grit. So, again, to your client, is it worth it? You can do it. No, I'm not saying don't do it, but just said after lunch, we're hard at and prepare to have some gumption and some grit. This can be some. I'll add to it. I know of maybe 5 examples where they were going for an assumption and then got so frustrated, they said, forget it, and went on the gun rental. Low mortgages. One of the most real life examples.
Yeah. So I think most of the time it's easier to just start your own loan rather than trying to assume it, unless you just have a never ending time frame available to you.
Great. Listen, one of my top producers in Portland, he's the best loan officer I've ever seen in my 20 years. This goal this year, 2024, was individually meet with in person. That's the part it missed.
I mean,
Here's my lady. Great food now. It's good. The business. Great way to do business. Still matters. After all these years, all the technology that exists, it still matters to listen to someone. Our job is to answer those questions and find them a solution. And be caught up in the numbers, fees, margin. They're going to be differently difficult.
I think listening is so important just in general, but it's just not as common anymore. So I think that really makes a huge difference when you're able to say that you really do listen. I'm sure everyone will really appreciate all of the information that you were able to give us today.
Pleasure to be here with you guys. Thank you for inviting me.
Yes.
I feel so thankful. You guys are awesome people and professionals.
Thank you to Dan Lyons from Nations Direct. We really appreciate you. I'm Jasmine.
and I'm Matt.
And we're the Mortgage Millennials.
Good.